Good morning, good afternoon, depending on where you're connecting from. Welcome to the FIGI session on Fintech for inclusion, harnessing and balancing innovation. My name is Harish Rajan. I lead the work on payments and market infrastructures at the World Bank, and I'll be the moderator for the first segment of this session today. Let me start by making a few quick remarks to introduce the topic of today's webinar. In today's discussion, we'll focus on one of the foundational pillars of financial inclusion, increasing access and usage of transaction accounts. In our experience, this serves as the foundation for expanding access to other financial activities and services like savings, credit, and insurance. Fintech can contribute and is continuing to improve the design of transaction accounts and payment products, make them ubiquitously accessible with enhanced user experience and awareness. It can make services more efficient and lower market entry barriers. Still, these benefits bring risk in terms of operational and cyber resilience, protection of customer funds, data protection and privacy, digital exclusion and market concentration, if not adequately managed. So that's why there's a need to balance the opportunities with the risk. The CPMI and the World Bank co-led a task force on payment aspects of financial inclusion that produced a report in 2016, identifying a set of guidelines organized around foundational and catalytic pillars for advancing access to and usage of transaction accounts. These guidelines were supplemented with additional considerations arising from Fintech in a publication in April 2020 called the Puffy in Fintech Era, and a set of tools later in 2020. I co-chaired along with Mark Hollanders, who will be moderating the second segment of the session, the second innings of the Puffy task force. This session will provide an overview of these reports and tools and how these are being applied in different country contexts, and then also how it will support countries in their approach towards advancing financial inclusion. We have structured the discussions today into two segments. I will be moderating the first segment, in which we will introduce the Puffy reports, Puffy in the Fintech Era, and Puffy tools. The second segment will be moderated with Mark Hollanders, in which we will hear from several countries on their experiences in applying Puffy and to leveraging technology for advancing financial inclusion. To get us started in the first segment, Maria Teresa and Thomas Lambert would start us off. This duo played a critical role in the development of the Puffy and the Fintech Era report. Maria Teresa and Thomas Lambert were both representing the European Central Bank in the Puffy task force. So since then, they have moved jobs. Maria Teresa is now at the World Bank, and Thomas is in the Secretariat of the CPMI. This would be followed by a presentation by Oya from the World Bank on the Puffy tools. She led the workstream that produced this report. We will have an opportunity for some Q&A at the end of both segments, but please do use the chat window to post questions through the course of the discussions. Before I pass on to Maria Teresa and Thomas, a few quick remarks on FIGI. The Financial Inclusion Global Initiative, FIGI, is a partnership between the World Bank Group, the Committee on Payments and Market Infrastructures at the Bank for International Settlements, and the International Telecommunications Union. It is funded by the Bill and Melinda Gates Foundation to support and accelerate the country-led reform actions to meet national financial inclusion targets, and ultimately the Global Universal Financial Inclusion Access Goal. The FIGI funds national implementation in three countries, China, Egypt, and Mexico. It supports working groups to tackle three sets of outstanding challenges for reaching universal financial access, namely electronic payment acceptance, number two, the digital ID for financial inclusion, and number three on security infrastructure and trust. And it also hosts the symposium. This is the third symposium we are all attending today. The FIGI symposium provides a forum for dialogue amongst telecom and financial authorities, financial service providers, DFS providers, and related stakeholders to share experience and perspectives on scaling up of digital financial services. With that, let's get started, and I would request Thomas Lambert and Maria Teresa to start us off. Thomas, over to you.
Thank you very much, Harish, and it's a pleasure to present today the Puffy for Fintech or Puffy in the Fintech Era report. But let me start off with I'm looking back 5 years when we issued the first joint report, CPMI World Bank report on payments aspects of financial inclusion. And if we move to the next slide, this report was based on some key premises. These key premises were that efficient and accessible and safe retail payment systems and services are critical for greater financial inclusion. To some extent, they can serve as a gateway for broader financial services, and they can be based on a deposit transaction account, or rather traditional bank account, or an account with a new service provider like an e-money account or mobile money account. And the last and very important premise we based our report on was that all individuals and businesses should be able to have access to and use at least one transaction account operated by a regulated payment service provider. Again, it can be a traditional one like a bank, or a new entrant like, for example, a mobile money or e-money provider. And businesses and individuals should be able to perform most, if not all, of their payment needs via this transaction account, should be able to safely store some value on that account, and that account should also serve as a gateway to other financial services like credit, like saving, like insurance, for example. We can move on to the next slide. And as Harish already mentioned, the report was based on, or we kind of structured the guiding principles we issued in that report in the form or in shape of a house, with critical enablers being the foundation. These critical enablers are a strong and sustained public and private sector commitment, a conducive legal and regulatory framework, and a safe and efficient financial and ICT infrastructure. Based on this solid foundation, we can build the catalytic pillars or drivers for access and usage. And those are transaction account and payment product design, readily available access point and access channels, awareness and financial literacy, and last but definitely not least, the leveraging of large volume recurrent payment streams, like, for example, transit payments, government-to-person payments, can be utility payments in this regard, but also, very importantly, international remittances. All of this combined should increase the universal access to and usage, infrequent usage of transaction accounts. We can go to the next slide. Of course, since 2016, quite a lot of things have changed, and we've seen what some would call an unprecedented change in terms of innovative pace in the financial space, in the financial domain, especially also in payments. And this is often referred to as Fintech. For that reason, about 2 years, 2 to 3 years ago, the CPMI and the World Bank reconvened the payment aspects of financial inclusion task force to look specifically, among other things, into the implications that Fintech could have on the payment aspects of financial inclusion. And Harish already referred to some of the opportunities we decided to look at from the outside, like efficiency gains, market contestability, improved user experience, but also ubiquity, and also some of the challenges that need to be tackled. This increased financial technology in financial services, of course, also increases the potential cyber risk. So safety and cyber resilience was one of the challenges that we looked at: consumer protection and data privacy, market concentration due to new large entrants into the market, and last but definitely not least, the risk of digital exclusion if we are mainly relying on digital financial services. We can go to the next slide. So the kind of written objective was that we want to see how Puffy can become a smart home, and how it can provide also in more people financial shelter. And by doing so, we looked at different products, access channels, and technologies. And we'll spend in a minute a few sentences on those. Can go to the next slide. So the result was the Puffy in the Fintech Era report, or Puffy 2.0 report, that was published about a year ago in April 2020. And this report, as we can see on the next slide, is structured along several sections. First of all, we analyzed the Fintech developments that are of relevance of the Puffy framework. Of course, we know that there is a lot of activity ongoing, and we had to make a choice and select those that we consider to be most relevant in the context of payments and financial inclusion. Opportunities and challenges these Fintech innovations or these Fintech developments might have in driving access and usage of transaction accounts was another topic we looked into, and also the role basic foundations in harnessing Fintech's opportunities while addressing also the challenges that was looked at. Last but not least, we reviewed the guidance we issued originally in 2016 and checked whether the guiding principles and also the key considerations we had developed back then are still relevant, whether there is any need for any change, or whether there are some specific elements we want to look at when it comes to fintech developments. We structured the report along the so-called Puffy Fintech wheel that is shown on the next slide. And there we, as mentioned, made a choice in terms of product, access modes, and technologies we looked at. At the core, there are, of course, these new technologies, and we started to look at application programming interfaces, big data analytics, biometrics, cloud computing, contactless technologies, distributed ledger technologies, digital identification, and Internet of Things. And these technologies can be used to improve existing products or access modes to retail payment instruments, but it can also be the basis or form the basis for new products and access modes. And in terms of new products, we looked at obviously central bank digital currencies, instant payments, and stable coins. And they can also be accessed, for example, via electronic wallets, so-called super apps, or open banking. I'll hand over now to Maria Teresa, who will kind of guide you through some of the findings of the Puffy Fintech report and some of the lessons we've learned when analyzing the fintech developments in payments and financial inclusion more broadly.
Thank you very much, Thomas. Thank you to the organizers and the moderators to have me here today, and happy to take you through a bit the analysis that we have undertaken. So as Thomas mentioned, we kept the framework of the initial Puffy report, and then we structured the analysis on the fintech according to the Puffy house. So starting with the drivers, for each driver, the report provides examples of how fintech can resolve outstanding challenges and barriers. So with respect to transaction account design, which is the first driver of access and usage of transaction accounts, the report points in the first place to instant payments as a type of innovation that enhances transaction account design, mainly by satisfying user demand for more speed and user control. And the report also points to the fact that in order to make sense for the underserved and unserved segments of the population, instant payments need to provide a close substitutes of cash and act also as a gateway for accessing other financial services. Furthermore, the report highlights the role of open banking in driving usage of transaction account, mainly by, for example, enabling payment initiation to online merchants, for example, as well as potentially providing access to a range of financial products that are more customized to the needs of the users. Also within this pillar, the Puffy reports refers to cumbersome and costly due diligence and the role that the digital ID can have in order to facilitate PSP compliance with the identification and verification part of CDD. Also, as mentioned by Thomas, within this pillar, we refer to two more things. One is super apps and the other one central bank digital currencies. Now, in terms of what the impact that it can have on financial inclusion and access to transaction accounts, obviously super apps, just given the sheer size of the social media, social platform user base, as well as all of the type of use cases that they can support, they can of course have a huge impact on financial inclusion. And with regard to CBDC, the report notes that it can be designed with financial inclusion consideration in mind. However, the report also cautions against against replicating or duplicating private sector initiatives that could be equally positioned as public sector initiatives to provide access to a basic means of payment, such as, for example, an industry-wide instant payment scheme. Moving on to the second pillar within the slide, the analysis of the role of fintech in supporting the expansion of access points, so the second catalytic pillar of the Puffy house, starts from noting that the network of physical access points has become less dense, and then people have moved on to remote access points, remote access channels. Where internet and mobile data infrastructure is lacking or it's too expensive, then clearly the issue is that end users might only be able to use fintech innovation very sparingly if they can use it at all. And the rapid digitalization of payment and the reduction in access points and physical access points of PSP also can pose a challenge in terms of accessibility and acceptance of cash, which can deter certain customer segments from accessing, maintaining, and using a transaction account. And finally, within this pillar, we also point to the role of contactless technologies and QR codes specifically in order to offer a low-cost alternative to traditional POS infrastructure. The third pillar is the pillar on awareness and financial literacy. And here, the main consideration is the fact that there's a concern that the growing digitalization that we see in financial decision and in our daily life more broadly is not matched necessarily with increasing digital and financial literacy level. And at the same time, big data analytics tools can also provide a tool to perhaps transmit knowledge to end user, increase their knowledge about financial products, subject to these tools being properly designed, controlled, and maintained. And then finally, there is a last pillar, which is, as Thomas already mentioned, large volume recurrent payment streams. We looked at that too in the context of fintech. And here the report puts an emphasis particularly on cross-border retail payments and international remittances and the innovations that are happening in this space. And we do that having in mind the great potential that remittances can have in order to spur access and usage of transaction accounts by both senders and recipients of international remittances, and the fact that this large potential is still untapped. And here the report notes that the mix of fintech development happening in this space can support cross-border retail payments use cases, and these go from improvements in correspondent banking models to global closed-loop solutions, bilateral links between domestic infrastructure and multilateral platforms. So a mix of those could definitely benefit remittances use cases. And finally, this pillar also looks into transit payment and the role that contactless technologies could have coupled with electronic wallets in digitizing transit payments. We can go to the next slide. Yes. So now, as mentioned, we went through the opportunities. So fintech offers a lot of opportunities. At the same time, this comes at a cost. This comes with certain risks that need to be managed. And the report then turns to the Puffy Foundation to explore how the Puffy Foundations can help in address these challenges. And then we go foundation by foundation. And then to begin with the area of public and private sector commitment. A clear implication of fintech here is the fact that even more international and cross-sectoral cooperation and coordination are warranted in light of fintech. And this is because many innovative products are cross-border in nature or operate at the crossroads of several financial sector fields. So in that respect, if you think of the international response to global stablecoins or the G20 cross-border payment agenda, these are clear examples of increased coordination and cooperation in light of fintech developments. The report also argues that the collaborative approach is key to making an impact in terms of fintech, and it highlights a number of regulators' initiatives such as sandboxes, innovation hubs, and innovation offices. Now, the experience so far shows that these initiatives are neither necessary nor sufficient in order to promote the use of transaction accounts or access to transaction account. And in that respect, the report also hints to the fact that these initiatives are positive per se, but need to be structured in a way that financial inclusion considerations are embedded in these initiatives. And moving on to the legal and regulatory foundation of the Puffy House, this is another foundation we look at, and this is particularly key for fintech. So first of all, we take stock of the fact that regulators have put in place new licensing regimes, or others have established tiers within existing regimes in order to accommodate new entrants in the payments and financial services space. But the growth of fintech also leads to growth in the use of personal data, which might be beneficial for financial inclusion, but brings a lot of risks. And we point specifically to the fact of, or to some risks such as a missing consent for the use or sharing of data, illegal discrimination, unfair price segmentation, data privacy. These are all type of concerns that may lead financial sector authorities to look again at the data protection framework, and then to go into it with a view to clarifying what are the key rights and obligations that the various stakeholders have with respect to use and sharing of data. There's also a discussion within this pillar, an important discussion on oversight and how fintech might challenge some oversight concepts. Now, generally, we conclude that most of the frameworks are supposed to be technology neutral. Notwithstanding this fact, it is important to make sure that the applications of this framework in the national domain is reviewed on a regular basis in order to make sure that it is future-proof. We also reflect slightly on the governance issues that come from distributed model and from the diversification that happens as a result of fintech. Another consideration that we make in the legal and regulatory framework, and this was also mentioned before by both Harish and Thomas, is the issue of customer fund protection. And this is particularly important. We reflect again on this, on the need to ensure functionally equivalent protection, as in the case of traditional deposit accounts. We reflect slightly also on the fact that ensuring this functional equivalence in the case of crypto assets and stablecoins might be particularly hard. But these are ongoing discussion. Moving on to the final foundation, we have financial and ICT infrastructure. Here, some considerations revolve around access to payment systems. This is not new. This is not a new discussion, but the role of fintech somehow emphasizes the need to address access criteria and the ability of new entrants to decrease their reliance on competitors in order to access clearing and settlement services. And here, I must remind the audience that we also make a reference to the principle for financial market infrastructure, which define the standard for access to systemically important payment systems that are taken also as a reference for retail payment systems. Other considerations here are interoperability, cyber risks, which is obviously something that is not unique again to fintech, but is somehow exacerbated by the fact that new entrants may also increase the entry points for cyber criminal and all the complications that come with DLT setups and the allocation of responsibilities in such distributed environments, as well as the role that big outsourcing can have in terms of perhaps also exacerbating cyber risks. With this, I think I would then go to the next slide. Just to, I don't have a lot of time, but I wanted to show you, because this was clearly one of the objectives that we had, I wanted to show you how all of this analysis translates effectively into complementing the existing guidance, the existing guiding principles that we have in the original Puffy report of 2016, particularly by adding a fintech focus to selected key actions under each guiding principles. And I would use the guiding principle 1, 2, and 3 to show how this is done. So for example, when it comes to fintech focus under guiding principle 1 on the public and private sector commitment, the fintech focus calls out specifically the role of fintech stakeholders and fintech expertise as an integral part of the strategy and of the financial inclusion strategy and financial inclusion effort. as well as the cross-border and cross-sectoral nature of coordination required in order to support financial inclusion in the fintech. Going into guiding principle 2, just to give you another example of how the analysis is translated into guidance. If you can go to the next slide on guiding principle 2, perfect, thank you. Similarly here, the fintech focus on the GP2 highlights the role of new technologies for supervision and oversight, and the need to ensure, as I mentioned before, a functionally equivalent standard for the protection of funds in the context of new payment products, as well as disclosure, data protection, and privacy, which are shown in the next slide. Perfect. So finally, if you can go, I will show just one more and then I'll hand it over because I'm out of time. But similarly, again, in the case of financial and ICT infrastructure, what the analysis is translated into is in highlighting, in this case, in the case of ICT and payments infrastructure and financial infrastructure more broadly, in highlighting the role of digital ID and the inclusive design of payment infrastructures. So broadly speaking, this is how, and you could also going through the other principles. This is again the same idea of complementing the guidance that we already have by offering under the key actions additional guidance or additional information on how the guiding principle could be met in practice in order to take into consideration the role that fintech may have in achieving the broad objectives under each guiding principle. And with this, I'll send the floor back to the moderator. Thank you very much.
Thank you. So now let's hear from Oya.
Thank you very much. I guess we should start from slide 4. So if we can proceed a couple of slides, next one, and the next one, and the next one. Okay, thank you very much. So I just wanted to skip a couple of slides because the context has already been there. So I will now focus on just one slide before, please. Yes, thank you. I will now focus on the application tools report that came out last year from the Puffy task force. So basically, the application tools report provides further guidance to the users of Puffy on the interpretation of the guiding principles and application of the guiding principles. And it is based on firsthand experiences of the task force members in their assessments of their own jurisdictions, and also based on the experiences of the World Bank through the Universal Financial Access Initiative in terms of the operational work in this field since late 2015. The application tools report does not really aim to change any guiding principle, or it does not really try to set any standards or anything of the sort. But in essence, the report itself is trying to provide additional tools besides the original Puffy report to the users, so that there is some uniformity and consistency in terms of the interpretation and the application of the general principles. Next slide, please. So essentially, the tools in the report is aimed to help support country diagnostics. And the aim there is to enable certain type of collection of information in support of Puffy general principles. And then also the report proposes some core indicators for each of the guiding principles so that these indicators can measure and track progress in enhancing access to and usage of transaction accounts. And then again, with the help of these indicators, the users can make comparisons with international benchmarks. Or comparisons over time with the jurisdiction's own situation. And then lastly, of course, internal follow-ups and state of reform efforts can also be observed over time. Next slide, please. So what are these tools? So we have certain tools that assist the users for diagnostics purposes. We have certain tools for measuring and monitoring progress. And we also have developed a progress reporting matrix, which is kind of merging the diagnostics tools and also measurement tools. So the idea is that there's some external data collection process. This is done in two different ways. So for the diagnostics tools, the data collection process is done via a questionnaire that is developed for this purpose. And then for the measuring and monitoring progress, basically we have developed a results framework that has indicators. And we also have a number of sources indicated in the report for the purposes of this results framework. But of course, jurisdictions may have different data sources for very similar indicators, which can then be substituted for these globally available data sources as well. So once the data are collected, the diagnostic tools basically also enable the user to draft the assessment report by providing some sort of a guidance on how the report can be written via a template. And then on the measuring and monitoring side, we have certain different methodologies developed so that the user can actually see progress of the jurisdiction against international benchmarks or progress of the jurisdiction over time in terms of the entire Puffy house. And then, as I said, the last set of tools is basically the progress reporting matrix. This is basically to show how a jurisdiction may have taken potentially a reform from start to finish. So I will now describe all of these tools in a little bit more detail. So next slide, please. Okay, so this one is on tools for diagnostics. So the key elements are the questionnaire and the report template. So the questionnaire, as I said, is to collect some information in a uniform way and a consistent way for doing a Puffy diagnostic. And then the report template basically translates these questionnaires, this information collected via the questionnaires, and enables the user to draft a report. Next slide, please. So this slide kind of visualizes how the questions match the guiding principle. So this is an example from guiding principle 1. So each guiding principle has a number of key actions for consideration. And under each key action for consideration, there are several questions that are developed for the questionnaire. So the user is basically advised to use these questions so that at the end of the day, we achieve uniformity and consistency across different Puffy diagnostics. So this is basically done for each set of guiding principles, and under each guiding principle for each set of key actions for consideration. Next slide, please. Okay, so this is the diagnostic report template. It's very tiny in font, but basically the idea is that for each guiding principle, the report, the template describes the context of it, and then the status in the country or the jurisdiction is described based on the information received from the questionnaire. And then recommendations are made based on the user's understanding of the responses and in comparison to the context. Next slide, please. So tools for monitoring and measuring progress. So this is the second set of tools. So key elements here are the core indicators, and then the indexing process, and then the last set of output, the Puffy Radar tool. So the core indicators are basically the results framework that the task force had developed. Indexing, basically what we ended up doing is we chose an indexing methodology to construct indices for each of the general principles of Puffy out of the multiple dimensions within each general principle that we could measure. And then the Puffy Radar tool is an Excel-based tool. Basically, it enables us to build a picture of a jurisdiction at a point in time that gives us the level of development or the status of the jurisdiction with respect to all 7 Puffy general principles simultaneously. When we get to that, you can see what I mean, but essentially what we think is that access to and usage of transaction accounts, which is the roof of the house, is the ultimate outcome. But at the same time, there are a lot of ingredients to it, such as we know, like the rest of the components of the house that we may want to measure progress against. So certain elements in terms of the house, certain parts of the house may be progressing much faster than the others, and it may be good to actually see the progress as a whole rather than just measuring the headline indicator on ownership of transaction accounts. Next slide, please. So for each of the general principles, we proposed core indicators, a number of core indicators, measuring different dimensions. Whenever available, we also proposed data sources that have a large cross-section of data, and in many instances also a time series as well. We also tried to make it possible for the users to access this data as well. Next slide, please. So in addition to the guiding principles, we also proposed indicators to measure the ultimate Puffy objectives, accessing a transaction account, performing most, if not all, of one's payments needs, and safely storing some value. Next slide, please. And then, of course, in some cases, there were some composite indicators. So we also describe how those composite indicators can be constructed. Next slide, please. And then the idea that I mentioned about indexing. So as you have just seen in the previous few slides, we have a number of different indicators under each Puffy guiding principle. And what we needed to do, of course, is to think about whether we could come up with an index for each guiding principle. And the idea here is to think about how we can use different indexing methodologies in the literature to actually find someone that fits our purposes. So I'm not going to go into the details of this methodology here. It's in the application tools report. But essentially, the idea is that all the data are normalized into a same unit, and then they are aggregated to form the index, and then they are fed into this process to form the Puffy Radar, which is coming up in the next slide. Next slide, please. So here on the left side of the slide, you see the Puffy Radar. Essentially, it's a spider chart, which shows the progress of one jurisdiction based on the entire 7 dimensions of Puffy. So why Puffy Radar? As I was saying at the beginning, we don't necessarily only want to measure the progress towards the headline indicator of access to accounts, but we also want to think about how progress in the other dimensions within the Puffy house is happening for a jurisdiction. So therefore, we wanted to come up with one picture that can display this progress for a jurisdiction. So for instance, what you see in this particular spider chart right now is essentially the jurisdiction country A is the solid gray line. And in comparison with a benchmark sample, which is the black dotted line, and also in comparison to an observed top performing country, this is a hypothetical country, which basically is constructed by merging the top scores in each guiding principle, under each guiding principle. So this is to say that, you know, those top scores were feasible in the data set, and country A is compared to the top performing country performing as such in different guiding principles. So for example, in terms of guiding principle 1, country A is performing really well, whereas in the others, it's not really performing as good. So this is basically giving us a general picture of how things are going. So next slide, please. So this is the last tool that we have, as I mentioned earlier. So this is the reporting matrix. And the idea of the reporting matrix is that it's designed to identify key aspects from a project management perspective. So for instance, you know, in order to do some reforms, a jurisdiction may have certain different projects in mind, certain different reform ideas in mind. So this matrix is intended to periodically capture the aspects, such as specific measures that were initiated to address identified gaps, public and private sector parties involved, expected outcomes, and associated challenges. So if we move to next slide, it can be a little bit clearer. So for instance, this is for the guiding principle number 4. A couple of key actions or considerations are identified, and then current status, you know, priority for the central bank, status of implementation, central bank's responsibility, reforms launched and their status, time frame, challenges, and additional comments, and so on. So this is kind of like to provide a picture of what is going on in terms of the reforms that are identified. So with that, I stop here. Thank you very much.
Thank you, Aya, and thank you also to Maria Teresa and Thomas Lammer. So I hope that gives you a good overview of the Puffy report. These are available for download at the World Bank and NBI's websites. With this, let me pass it to Mark, and please do keep the questions coming in the Q&A window. Thank you. Over to you, Mark.
Thank you very much, Harish. And also thank you to Maria Teresa, Thomas, and Oya for presenting the reports we published this year. The Puffy Task Force, of course, and Harish and I were co-chair of this task force, started in 2016 with the first report, which laid the basic foundations for the work. And we now did 2 reports in 2020 to add fine-tuning, if you want, on fintech developments and on the tools to actually apply the report in practice. Let me start by quickly introducing the panel. We have Miguel Diaz. He's Director General of Payment Systems and Market Infrastructure at the Bank of Mexico. We have Hakima El Alami, who is Director of Payment Systems and Instruments, Oversight and Financial Inclusion at the Bank of Morocco. We have Ledia Bregu, who is Director of Payments, Accounting and Finance at the Bank of Albania. And finally, we have Pearl Malumane, Senior Analyst, Policy and Regulation Division at the South African Reserve Bank. And before we start, I should mention that all 4 of those central banks were active participants in the Puffy work, for which we obviously are very grateful. And also 3 of them were members of the task force and have been intimately involved in the 2 last reports. So I look forward to a very informed discussion. I will ask questions to the panelists. I will ask you to try to keep your answers focused on, to keep it short, because we have about 45 minutes left now. Also, Thomas, Oya, and Maria Teresa, and of course, Harish, if they want to add something at some point, they're welcome to jump in, of course. But I will start with asking a few questions to the 4 panelists. My first question would be, since we focus very much on the last 2 reports and they're very new, it might be beneficial for the viewers here if we could step back a little bit and just very briefly you could give us our experience of how helpful the original Puffy framework with the Puffy House and the 7 guiding principles has been in your country in promoting financial inclusion. I know that at least 2 of your countries did a self-assessment, maybe the other 2 as well, I don't remember. So if you could just tell me if you found the Puffy report very helpful and how you went about to using it in a very concise way. Maybe I can start with Miguel to use the same order of introduction. Miguel?
Yes, thank you, Mark. Of course, since we participated in the report and we really used that very much. Let me give you just one big overview of what we think about financial inclusion and how we're trying to implement the elements that were shared in the report. So our view, and I'll try to go from the general to specific and be very brief. So our view is basically that every Mexican should have access to payments, as Thomas mentioned a few minutes ago, are the stepping stone into real financial inclusion. So we do believe that payments are essential and are very important for financial inclusion. Now, based on this and the fact that so technology has always been within the financial sector, so that there has not been a moment in which financial entities have not tried to use technology. Now, the different thing now is that we have experienced 20 years of exponential growth in technology, and this has generated really a bloom, a giant bloom of different ways of providing services, new types of firms providing the services, new ways of providing old services, and so on. And this has generated really lots of pressures and lots of challenges for central bankers and for authorities on how to deal with this by maintaining certain balances that we need to keep. There are at least 5 balances that we need to keep. How do we manage risk versus innovation? How do we manage to have economies of scale and competition? How do we manage to get efficiency and yet to have systems that are secure? How do we manage to get diversity and at the same time have a certain level of standardization that allows for the externalities regarding networks to be exploited fully? And how do we manage to get privacy and security? And I believe that in trying to get to these 5 balances, we actually need to step a little bit back and to identify which are the tools that are available for central bankers or for authorities in general. From our perspective, we have identified at least 2 very important tools. One is to actually develop a central infrastructure that is available for everyone. Why develop central infrastructure and open it up? Well, basically because the network externalities from the perspective of payments, the network externalities are of the essence. You can have the best idea, but if you only have 10,000 clients, even the best even the best idea will not go through, and it will not serve our financial inclusion objectives. So what we need to do is to generate this infrastructure to which everyone can actually jump in and join, even if you're small or you're big. It shouldn't matter. So everyone should be able to connect to this basic infrastructure in order to have a reach to all the network and to have this network externality available for everyone, so that we can switch from a competition that right now is between how big is your network, where are you coming from, and how much money you have in terms of pushing your idea forward into the market, to an ecosystem in which we actually can get a competition of ideas, some sort of Darwinian element there, in which new ideas come, and some of them fall by their own weight, but some others actually take place and they exploit this network externality. So that is one point. Generate financial infrastructure available for everyone and make it as open and as widely available as possible, both because of the network externalities and also the economies of scope and the economies of scale that you can get out of this. If we manage to do this, the ideas will flourish by themselves, and they will actually reach the niches of the population that we want them to reach. So it's just a matter of leaving the market access this type of externalities. The second element that is very relevant on these technologically changing times is that nowadays things that in the past were very straightforward, such as a payment, now you can cut a payment into 10 different stages. And if you have different institutions providing these different 10 stages, and then you compare that with the regulation that is available, then you can get with certain risks that are still there for the user and that are not being mitigated because the regulation was written as to have one institution providing the whole payment flow. I believe that we need to actually do an in-depth analysis of how our regulation is working and how the technology is actually allowing for these services to be provided on a separate ways. So this is not just on payments, this is in many other financial services. And I believe that we actually do need to change our focus on regulation from taking particular institutions and saying this type of institution has to be regulated like this and like that, to change and say, you know what, this type of function has to be regulated like this and like that. So payment initiation, everything that we have already all heard in the markets, I think we need to do an in-depth analysis and to actually go back to our regs and check whether these are consistent with the new times on splitting different types of payments, or actually regulating certain things that were not there before, but that generate certain financial risks that are the same as the risks that were generated by some other services that were provided before. So just to summarize, that's our vision is give everyone payment so that they can join in and actually get real financial inclusion through the stepping stone, which is payments. Keep the 5 balances in check so that we can actually get the most of the benefits without many of the risks that are there, and use public infrastructure and check your regs to see if you have to change something. So in the end, just to summarize, is the more the merrier in payment systems. So the more ideas, the better it will they will do on a Darwinian environment, and we should create ecosystems that are consistent with this.
Thank you, Miguel. Very interesting. The idea of this first very general question was, of course, also to give you the opportunity to make introductory comments, which I didn't mention, but it's good for the viewers to know. So Hakima, next to you, if you could also share some introductory comments and also focus a little bit on the application of the Puffy report in your country.
Thank you, Mark. First, I would like to precise that I was very honored to be part of the Puffy working group. in order to elaborate the toolkit for self-assessment against the Puffy principles. It was a very amazing journey for us. We are going to see on how the Central Bank of Morocco is implementing the Puffy framework and how the Puffy guiding principles can be leveraged in increasingly digitized payment landscape while mitigating risk. As you know, Bank al-Maghrib is convinced of the role of new technologies may have in developing financial services in our country, in emerging economies, because they help speed up financial inclusion and expand it to the most excluded segment of the productive fabric and the most segment of the population, owing to the broad coverage of mobile networks and internet penetration. Morocco intends to use the Fintechs contribution in implementing its financial inclusion strategy, which aims, according to the definition adopted by Bank al-Maghrib, at guaranteeing for all individuals and businesses of fair access to formal financial products and services to be used according to their needs and means, to promote economics and social inclusion while preserving their rights and dignity. This national strategy, drafted jointly by Bank al-Maghrib and the Ministry of Economy and Finance, rests on two Fintechs related pillars, namely, first, developing alternative and lower cost model to reach the most excluded population in accordance with their specificities, and two, creating conditions for greater use of financial products by accelerating dematerialization of payment, in particular between the states and the users, to establish financial inclusion in household behavior and by improving financial education. In another hand, Bank al-Maghrib has adopted in 2019 its new digital strategy, aiming to place the central bank as an innovation catalyst for the market. Also aware that the Fintechs can exceed the spectrum of payment institution, our institute conduct a benchmark and very different studies with the assistance with the World Bank to wisely think about the regulatory approach to support Fintech regarding the Moroccan context. The studies allows us to propose a certain number of recommendations quite quickly. First, act as a catalyst for the Fintechs markets and support a new startup. Second, create a direct dialogue between Fintech and the professional, especially to help them with some the regulation question, and create a Fintech office, a central Fintech office within the central bank to guide project leaders and exchange as far as possible on the steps and diligences to be carried out to streamline the approval process. As a result, we have chosen the innovation office within my directorate, and we advise on unit approach just to set up this direct dialogue between the needs of Fintechs to understand the needs of Fintechs in terms also of regulation, and to make this needs in central bank regulation to help them to be in the market. Thank you.
Thank you, Hakima. Very interesting. Then we turn to Ledia and Bank of Albania.
Yes. Hello to all, and thank you for having me in this panel. I'll try to be short, but probably I'll go back to your initial question on terms of how the Puffy on 2016 was, how challenging and how it was applied. We were lucky enough to be one of the countries where the World Bank assistance tried to make the assessment. That's why the challenge of being, let's say, unstandardized or using the same metrics was not so difficult from our part. Nevertheless, applying all the guiding principles and assessing where we stand it from was a bit challenging because it included a lot of stakeholders. Our main takeaway and let's say the most beneficial deliverable of this assessment was that the Puffy guidelines and all the framework which was assessed for the Albanian market in payments, it was used as the basis for drafting the national strategy on financial inclusion and retail payments modernization. So it was a major and very positive input in knowing where we stand in comparison with these principles, even though they were not so detailed as they are in the last two editions, which we took part. But they also gave a much more insightful view from different stakeholders, the public institutions, the private institutions. What about new Fintechs, even though there was not, let's say, a legal framework supporting. Saying this, the strategy which was approved based on these recommendations from the Puffy assessment have been followed up from the central bank and all the stakeholders. And we are still implementing different action plans from different perspectives. So as the guiding principles of the Puffy, let's say, orientate, we have been planning and applying different interventions in the legal framework to give a basis and to give support to new Fintechs and to new entrants. In their presentations, Thomas and Maria Teresa mentioned that the access also of new entrants, but also Miguel mentioned it, that access of new entrants in the market needs to be balanced. So those who are big or small might have the same opportunity to make competition. From the perspective of as a regulator, we need the market to have as much alternatives as possible. And these comes into force only with tools like framework, like infrastructures, and giving access in a secure and in a, let's say, mitigated way. Lately, we have, following this strategy, we have approved a law on payment services, which is a transposition of the PSD2 directive in the European Union. Even though without being a member of the European Union, we are proud to say that we have finally a law that stipulates all the basis for thriving new Fintechs. And we have seen a good interest from new institutions that would like to play the role of payment institutions or account information institutions. But nevertheless, all other guiding principles serve as a guide for us, including here financial literacy, which is very important in a country where the financial education is quite low. And when we speak about innovation and Fintech, we need to build the trust so they're new or unbanked, let's say, part of the population has the same understanding and the same trust to use innovative tools to be more financially included. The strategy we have based on the Puffy results indicates numbers in terms of financial inclusion and in terms of cashless transactions. But even though we speak as financial inclusion as a major objective, at the end of the day, we see it as a tool to economic growth, especially in small economies like Albania or other countries in the Western Balkans. Economic growth is very important. And if we have financially excluded clients or people, that means less people who are using such services and less businesses who are using such services, which could have access to credit, to growth, and to, let's say, reduction of informality. And up to that, I will just add that the two new reports, the Puffy from the Fintech perspective and the application tools, are just a very excellent upgrade on how different jurisdictions can use such indicators based on the experience of other assessments, so you can make a clear path, or let's say a clear action plan, strategic action plan, either as a regulator or as a private institution, to where the jurisdiction is going, what can you contribute with added value services, how can you bring your fintech value in the market and make more inclusive markets for all.
Thank you, Ledia. That's very useful. And I'm, of course, and I'm sure Harish is too, very happy to hear that the Puffy work has been very helpful in getting Albania to promote financial inclusion. That's great. And I hope other countries listening today will take this opportunity to go back to the reports and see what they can do in their country. Then we turn to Pearl. Floor is yours.
Thank you very much. I have to say that this is a very interesting discussion. So from a South African perspective, financial inclusion is a very important element. So over the years, the focus has always been on financial stability. But other regulators and also the South African Reserve Bank, we have come to realize the importance of financial inclusion. So as a result, we have seen the growth of fintechs in South Africa. But however, we are aware that there is a limit in terms of our current regulatory framework. So our current regulatory framework, it's very restrictive in terms of what type of payment activities fintechs or non-banks are allowed to do. So for example, if it's a payment service that has any deposit taking element, they would need to partner with the bank or they would not be allowed to provide that service. So for example, services such as mobile money, e-money remittances, or even provision of transactional accounts. Unfortunately, with the current regulatory framework, non-banks, fintechs, they are not enabled to. So as a result, we are in a journey of transforming our regulatory framework. So in this regard, this was pronounced in our strategy document. It is called the National Payment System Framework and Strategy. Everybody knows it as Vision 2025. So basically it's a strategy and it has various strategies and goals. And one of the important goals that is in that document is financial inclusion. So it has several proposals that the Reserve Bank and the payment industry are supposed to achieve by 2025. And also it outlines the importance of fintechs and also the promotion of digital payments. So in relation to us reforming our regulatory framework to enable fintechs to provide financial services such as the provision of transactional accounts and e-money accounts, we are in the process of reviewing our National Payment System Act. So there was a policy paper that was published in December 2018, and it has various recommendations on the changes that are proposed. And one of them includes the adoption and support of financial inclusion in the national payment system by enabling non-banks as well to provide payment services such as remittances and e-money and the provision of transactional accounts. And this would definitely enable fintechs to penetrate into the market and to effectively compete with the current traditional incumbent banks and to better serve the underserved market, such as people that reside in the rural areas, but also the market that do not use their transactional accounts effectively. Because, for example, we have the social grants, and they are paid, most of them are paid through a card. But however, the users of the social grants, they normally withdraw all of the money. So they normally don't use their cards to transact. So with fintechs, being enabled, it would definitely enhance not only financial inclusion, but also competition and innovation in the national payment system and also throughout the country. And also in this regard, there is the Intergovernmental Fintech Working Group. It was established in 2016 to understand the growing role of fintechs and innovation in the South African financial sector and explore how regulators can more proactively assess emerging risks and opportunities in the market. So in this regard, it has a regulatory guidance unit where fintechs who have new ideas in the market, they would take the ideas through the regulatory guidance unit for regulatory guidance. And also it has sandboxes as well when fintechs can test their product within a safe regulatory framework. So from a South African perspective, and also looking at the Puffy principles, one of the main critical enablers, it's definitely the regulatory framework. And this has been articulated in various documents from our assessment from the World Bank and also from our own assessment with engaging with the industry and the rest of our stakeholders, that this is definitely a shortcoming that needs to be addressed to deepen financial inclusion in South Africa. Thanks. Those are just my opening remarks. Thank you.
Thank you so much to all of you. I think these opening remarks have set the stage well. They also gave a good overview of the work done in your countries. We have about some less than 20 minutes left. So I would like to touch upon two topics, which I think are extremely topical these days. And I would like to try to get to two full rounds of comments from you. The first relates to Corona. The second one will be on central bank digital currency. So first on Corona, I would like to ask you, for your countries, of course, has there been any impact of the COVID-19 on the use of payment instruments? And if so, has this led to an acceleration of fintech innovations and other innovations in general? Certainly in Switzerland, you can see that contactless payments have increased sharply since last year, and the use of cash has decreased, but maybe there are other things you're thinking of. So if you could keep it short and focus on the actual changes you have seen so far. I think I'll stick to the order and go first to Miguel.
Thanks, Mark. So the pandemic and the quarantine that it generated did increase, of course, the use of electronic payment systems. In particular, we saw a huge increase in terms of e-commerce, and not just e-commerce, but just people calling on the phone and then just sending transactions through the regular transfers and things like that. We have if you see it from an econometric perspective and you try to actually identify the effects of the pandemic, it's not so clear because we already had a very, very steep increase before the pandemic. And if you try to do an analysis in terms of trying to identify structural breaks on that data series, probably you won't find it as easily as you would expect. Let me give you some numbers. So just for example, the small value payments in our real payment system and our fast payment system, which is called SPAY, from March 2020 to March 2021 increased in about 110%. And the interesting thing here is that the trends are, the rates of increase are increasing at an increasing speed. So if you take that, you would see an exponential rate of growth. Of course, it cannot stay there forever. But starting from our position in which we have 90% of use of cash in Mexico, it can still be there for quite some time. So we did see this huge increase in terms of the usage of electronic payments some of it, I'm perfectly sure that some of it might be due to the pandemic, but actually identifying and separating the effects of what was already going on there because of the infrastructure that we had already created, and how people were actually starting to learn and starting to identify the benefits of joining the electronic payment ecosystem and gaining all the other financial services that come with it. We can't separate that perfectly clear. In terms of the card networks, and just to make a comparison in terms of how people are jumping in, and this was not necessarily the people that were already in the ecosystem. If you take the card network systems and you take the number of transactions of those, actually during the peak of the quarantine, these type of payments did go down. So of course you have two shocks. You have the economic shock in which people are going to use less money and they're going to do less transactions. And then you have the other shock, which is I cannot do it physically, so I have to do it on an electronic term. So it's a quite complex, from an econometric perspective, it's quite complex to identify the trends. But the thing that I wanted to say is that when you take the traditional payment networks, so the card payment networks, which were the ones that are the most used, and you see how these ones are changing, and then you take the faster payment systems and see how they're changing, there is quite a difference. So how we identify, how we think about this trend is that actually more people are joining the ecosystem, and some of the services that we're providing through this infrastructure that is open to everyone, and where we are allowing all the fintechs to come in and provide the services, are actually kind of working, and some new services are actually sprouting and providing services for the final users.
Thank you. I turn to Hakima.
Thank you. Mark. In Morocco, it was the same. In the COVID context, we have seen that the number of contactless payment were increased by 700%, and the number of card payment also increased by 20%. In the certain bank, to support this dynamic, and regarding the resilience of payment system, who are the very critical component in this process, we continue and we have assisted all financial markets infrastructure to implement the necessary measure for their continuity of business. In particular, in the management of critical human resources involved in the payment and settlement. The efforts have been focused on retail payment system, namely the ACH, automated clearinghouse, and the switch for both mobile payment and card payment. We at the same time and to support the growth of the use of electronic means of payment, we and in view to reduce also the use of cash, we continue our effort to with the close collaboration with banks and the payment institution to promote digital payment. We have taken several measures. First, we make it easier to open payment accounts remotely. We have also eased the KYC requirements for the opening of level 2 of payment account. This is the transaction accounts that are capped to about around $500 US dollars. By requiring only a scanned copy of the national ID and the mobile phone number. We to ease the onboarding merchants in this process, we have allowed this enrollment of merchants just by providing their ID and not the trade number, but just their ID and the number of patent, which is a tax ID. And we rise up the cap of contactless transaction from $20 to $40. All the measure taken is to continue to increase the number of DFS, as we know that the link between the use of digital financial services and the financial inclusion.
Thank you. Lydia, please.
Yes, I will not try to replicate some trends that I suppose were seen in every country from every continent, like raising instruments of payments, which like cards or electronic transfers might have grown due to the lockdown. And we have seen that in our country as well. For the first time, card payments surpassed the paper-based transactions in the branches of the banks. And of course, what we saw is that there was an adaptability, which was or flexibility of financial service providers, which was unchallenged before. So they tried to adapt at the very moment to offer such financial services, even in distance or remotely. We were happy to see that many of the objectives put in our strategic plans due to the Puffy results were taken into consideration and were accelerated much more faster than we would be expecting. So the positive side of this very unpositive year 2020 was that we achieved a lot of action plans that we rather would not be achieving so fast only by raising awareness. And it's unlikely to mention that such awareness of using other payment instruments different from cash was raised because of restrictions. So it comes into mind that it's quite more important the education and the, let's say, trust building to different users and different stakeholders, which might not be so, let's say, objective in terms of pandemic or in terms of stressful situations. And what we can take from this situation and what we have agreed discussing also with banks and other players is that you need to take this momentum where people and clients are being more trustworthy of such innovations or usage of other payment instruments, so you can build up your new way of banking or your new way of making financial services. From the perspective of the regulator or let's say the institution of the central bank, as many other jurisdictions, there were taken many measures in terms of social economy transfers or let's say credit postponement. So we thought that we would add up something also in the payments landscape. And we tried to waive so many, let's say, fees for using either home banking or internet banking to the clients, and also balancing such losses from the offers of such services that are participants in the payment systems. We tried also to change regulations to make a distinction between electronic payments and those who are cash-based or paper-based. So trying to keep this awareness alive for a longer time than 1 year or 2 years of pandemic. And nevertheless, Hakim also mentioned it was very crucial, and it doesn't mean that it comes second in line, but business continuity plans and business continuity scenarios in place tested before were seen as something very important, and lessons learned from keeping systems running efficiently and smoothly without interruptions became the major and critical issue. Raising electronic payments during the pandemics and all the positive sides that came within were good for us and a very good basis to continue our efforts on implementing usage and financial inclusion. But keeping in mind that it's crucial that this system need to run in order that all the payments and all the monetary policy instruments keep flowing smoothly without jeopardizing any security of the whole economy or the market.
Thank you, Lady, and also thank you for introducing or linking the concept of business continuity plans with the Corona thing, which is of course very important, and I'm very happy you did that. Let me turn to Pearl.
Thank you very much. So I think just to add from this interesting conversation is that from a South African perspective, during the pandemic, it was important for us to focus on the safety, efficiency, and integrity of the NPS. And we have been looking at checks for a very long time, as we know that there's so many issues regarding checks. From a South African perspective, they are very expensive payment instrument. There's a lot of fraud involved in checks, and it has a lengthy processing period. And a lot of merchants, they do not accept checks as a payment instrument. There is no innovation regarding checks, and there's limited consumer protection and a lot of other issues as well. So during the pandemic, our stakeholders, especially the banks, they came to us and we had discussions that they were aware that the number of checks that were being used were drastically declining. So we took an initiatives ourselves in the industry to exit checks in the NPS. So for example, September 2019 to September 2020, there was a decline in volume of minus 52% and a decline in value to minus 82%. So we made a decision to collectively exit checks in the NPS. And also we had communicated to the public the importance of using electronic payments. And just to add from our side, what we have seen during the pandemic, it was definitely an increase in card not present transactions. And also this assisted the sub and the industry to also focus on important issues such as ineffective faster payments. We do have a faster payments in South Africa, but however, it is not working to our satisfaction because not all consumers are aware of this product, and it's a very expensive product. And now the industry is in this process of developing a much more efficient and effective faster payments product. And we believe that if it was in the pandemic, it would have also increased the usage of digital payments. Thanks.
Thank you very much, Pearl. We're running out of time, so we'll have to leave the panel discussion here. Before making a very few short concluding remarks, I was asked to tell you that there will be a poll coming up on the screen, and you are asked for your feedback on this session. I think that will appear any second now. So to conclude this session, let me give you a brief overview of what we did today. We had an introduction and 3 speakers presenting 2 of the new Puffy reports, the Puffy report on Fintech from April last year, and the application tools to apply the Puffy report in September of last year. After that, we had a panel discussion which touched only upon a few of those issues. We could have had a much longer discussion, but I think the discussion was very rich, and I want to thank all of you, the panelists and the speakers early on, for sharing their wisdom and their experience in what's going on. The other people who've been listening, I hope you found this interesting, and I would very much encourage you to go to the BIS or the World Bank website, and there on the financial inclusion, you will find those 3 reports. The one started setting out the beginning in 2016, and the 2 reports from 2020, which were discussed in more detail. You'll find a lot of useful information there, and we are sincerely believing that this will help you to promote financial inclusion in your country, which of course is what we're all about in this symposium. So final word for ITU. I want to thank them for putting together the symposium, for hosting it, and for doing a very good job in getting everything working. So thanks to all, and goodbye.
Thank you.
Bye, guys. Pleasure to have you today on the panel.
Bye. Thank you.
Bye.
Thank you very much.